All right, welcome everyone to another weekly edition of Stock Market Mutterings. Well, I will do my very best to grope in that murkiness to find you the very best trade ideas for the week. This is for the week ending on 3/3. Yes, 3/3 it would be. We had some great stuff we've been talking about. These other beta names, Tesla, Nvidia, Netflix, they have been offering up some incredible ranges. We're going to get into a little bit of that later. But if you guys need some help trading, feel free to visit the link in list.com and trade with us live. So, what do we say about the SPY? What do we say about this market? It's serious in mutter territory. It's like a roller coaster. And like we've been talking about the last couple of weeks since we really got this in this correction phase, the ranges, if you can get on the right side of the ranges, you are offered up some serious, I'm talking about some serious money. Now, if we look at the chart down below here, it looked like at the beginning of the week we were building on that rally, and you had some pretty strong movement there, and it kind of broke out of this, let's call this a flag, this 275. So if we go back to the 50 moving average, excuse me, the 200 moving average bounce, that's down here on this, just call it a teal line, this cute little teal line. It bounces and then you get this nice run up, which was kind of expected, and the market digests that move, and it actually makes a nice two-day upswing. Now at this point, the consensus was thinking, well, you know what, this thing might actually end up going back up here to all-time highs. I mean, this is the kind of move we've seen, right, over the last couple of years. We've had hits in this market, but we've seen it always come back. Now, this one may take a little bit longer time to do it, but you started to see that and you felt like, okay, that was going to happen. Well, right there about Tuesday, this thing started getting hit, and it just, with this trade war stuff coming out, it just got smoked, and it was just, relentless selling, and it basically for 3 days there, Tuesday, Wednesday, and Thursday, it took out everything for the last couple of weeks and brought you all the way back to the 14th, February 14th low, Valentine's Day low. And then you opened up Friday with a nice washout, and then you saw this pretty good bounce. Now, you're going to see these really good bounces in bear market territory. That's something we talked about, because I know a lot of you out there are trading a bear market for the first time. I wouldn't quite call this a bear market yet, but we are in a corrective phase. And you've seen since the initial correction took place at the very beginning of the month, you've had a complete different change of market. We talk about this every week. You went from this really peaceful, quiet, melt-up market to something that's very erratic. So a lot of you traders out there, you're dealing with this for the very first time. You're seeing this for the first time, and you've gone from a very comfortable scenario to maybe something that's a little gut-wrenching at times. You're seeing some big moves. Before you had Nvidia, Tesla, Netflix, these things are moving $7 to $10 every day. And as I said, if you can get on the right side of this, you can make some money. So let's take a look at this market. Where will we go from here? Well, I don't exactly know where we're going to go from here. What's the next step? But there are a few things that you need to look at. It's not uncommon to get a bounce like what we saw on Friday. That's something that you normally see after 3 to 4 days of solid selling. There's some sort of dead bounce there that comes into the market. The thing is, it's staying underneath of the 50 moving average on the daily chart and the 20 moving average. So if we start to move upwards, okay, I would look for resistance at about the 50 moving average, which is 273 on the SPY, 273. So if you start to see any sort of upward, let's say you get a gap up on Monday morning, or you see an upward thrust early on and everything is ripping and you're wondering if you should get back into the market, I would not feel comfortable doing that until you cleared 273 and actually back tested that number, because I would almost think that if you got up there, you would get resistance. Obviously, with this exaggerated chart, you're talking about some big ranges, so you can't really think you're going full-on bullish until you get to 278, and you're 9-10 points away from that where we sit right now. Now, the thing you got to really pay attention to, though, here is this low of Friday, which is about right up here, this upper chart. You had a little bit of a double bottom right there at 264. You got to pay attention to this 264. That's also close to the bottoms that you had on the 14th, the 13th, and the 12th. You had not to the penny, but you had some consolidation down there. You start losing this lower band, this thing probably goes right back down to the 200 moving average of 255. I mean, that's just the way it is chart-wise. when you're looking at technical stuff like this, the ranges are so wide, you can't say this market's bullish or this market is full-on bearish at a certain number because of the ranges, but you're definitely leaning far more to the bearish side. You're seeing these massive wipeouts where you've had lots of selling late in the day. So if this cannot hold right here where you are on Friday, I would almost think you're going to see a lot lower prices. It just feels right now with all the pressure that's on the market, what we saw in the past melting up to all-time highs. I don't know if we're going to see that here anytime soon. We might, but for me, it's a day-by-day process here with this. If you get a bounce, basically what I'm doing here is short, to make this short, you get a bounce, watch for that 50 moving average up here at 273's area. Look for that as rejection, and anything that goes underneath this 264, hold on, right? So let's take a look at some individual stock names that might come up. Now, one of the things that we've noticed here is stocks that have been grindy and stocks that have gone up a lot, vertical, parabolic moves or whatever it was, have acted like stocks of old, meaning that, you know, I felt that once the market started to break down a little bit and stop being so linear, that those verts, that those parabolics, that these melt-up stocks that we saw like Fizz, AAOI a couple of years ago, these long-time runners, you would not see that. However, we are seeing those breakout moves and we're seeing those parabolics, but they're still acting just like they were a few years ago. Case in point, this S-Fly. This is something I was already long once and got rid of, and here it is. It didn't matter what the market has done over the last couple of weeks, because ever since Valentine's Day, the market has dumped. Ever since Valentine's Day on this, well, the market hasn't dumped every day since Valentine's Day, but ever since Valentine's Day, this has been a sweetheart. It's just rolled right on up. It's barely had any down days, and they have been so small. At this point, I'm kind of looking to a short, but it reminds me of Fizz, which is a little bit on the dangerous side because, you know, when they get into these grinding patterns and they start going like this, they get really, really hard to short. It's different when you get an instant emotional parabolic or a pump and dump penny stock or something. When something gets going like this, it might end up at 100 before it stops. And usually when they start cresting 75, 80, that 100 talk. It reminds me of Fizz. It reminds me of AAOI. It reminds me of GoPro in the old days, those kind of stocks. So watch this one. I might take a few shots shorting this if we can squeeze to about 85, 86. But very, very tight stop with risk management a top priority on this one because these melters are a lot difficult. The only thing that makes me bring it up right here is because of the big day that it had on Friday. Again, leaders continue to lead. Maybe, and I would also, let me just rewind. Any kind of pullback on this thing is probably a buy. You know, regardless if I buy it or not, for your own good, this is probably a buy on any pullback. I wouldn't short it on any kind of reds. It would have to be a vert, but maybe it ends up, you know, being some sort of a long. So this S-Fly, there's still money in the tank there. Another one here would be the good old Grub. I remember when, you know, this thing has been different as well. I mean, this is another melter that's Fizz-esque. I'm sorry to keep using that word. The reason I got this one up here is because it's consolidated well over this market volatility. If the market's strong, let's say you have another strong, a Monday, Tuesday, Wednesday, or you have another bounce back up to that 50, you want to get a series of stocks that it look like they might break out over highs on the daily chart, because those are the ones that are going to benefit the first. The strong stocks are going to be strong in the market, and they're going to be stronger in weak markets. So this one right here is bordering a pretty good breakout here on the daily. And traditionally what we've seen is when these things have broken out on the daily, they've made some serious moves. I mean, you take a good look at Netflix here on Friday. And, you know, it was another one that didn't really come down much with the market when it was being sold. And as soon as it crossed right here over those daily chart highs of 295.50. Look what it did. It just went straight up. I mean, it just drove it right on into the close. So you may see something like that on Grub. Now, Grub won't be range-wise as robust as Netflix, obviously. But watch it. You might get a couple of bucks here, and it might be a smooth, easy, I shouldn't say easy, a drama-free trade. Now, another one here that I kind of want to start taking a nibble. These ones I'm giving you are grindolas. This one's a little bit steeper than both S-Fly and what you've seen in Grub. Is this DIN? I don't know where in the hell this thing's going, but this thing is up massive percent-wise. 55 to 70. I mean, he hit $79 on Friday. I know they had good earnings, but I don't know if they solved the world's problem in our trade war right now because people are acting like it. Now, just like I mentioned with S-Fly and, well, I didn't mention Grub as a short, but you got to be careful about these type of trades when you're shorting. It's not like the pump and dump, the parabolic, as I mentioned. They can be pretty difficult because they're in a grinder mode. So any kind of parabolic, I'd entertain the idea just on percent alone and RSI alone and where it sits as giving it a short, trying it. With that and S-Fly, the same thing would apply to all these. Actually, all these I mentioned today. I'd run a tight stop with them because what we have seen, a pattern that has, I don't want to say, it kind of caught me off guard a little bit. As I thought when we got the market to come down a little bit, you'd see more movement in these, something like we saw in 2016, 15, and 14, where you got those parabolics and they'd pull back real quick. Well, you're not really seeing that here. They're actually melting up, and they continue to melt. So any kind of pullback with this or S-Fly is a buy. I don't know if that's the strategy I'm going to take. It's probably going to be a buy, but I'd like to look at it short from this point on. No numbers. It just has to set up right. As I said, even with the market being weak, these have been stingy. I mean, look what it's done in the last few days. The market was sold off. It just continued to go up and went from 71 to 79. But something I want to watch percent-wise, just like S-Fly, that you might get a little pullback. And of course, not of course, but how about AAXN? So I'm throwing you out a couple of shorts. This one's a little bit more vertical. And this one's up huge, 27, 30 to 38 here. Big mover on this one. I'd like to look at maybe 41. One more shot, ripping over high on the daily chart there into 41. Could be a pretty good spot to start initiating a short. But again, you got to be careful with these. Even in bear markets, these have been a little bit tough. But this one, outside of what you see with S-Fly and DIN, this one is a little bit more vertical, a little bit more steeper RSI, so this one should be a little bit more focused on this one. I'm looking at somewhere around 41s to 42s. That may not happen. As I said, with all of these short ideas that you have here, if they gap down or they fade a little bit, you may want to take that stance at buying. I couldn't disagree with you on that one. I mean, it's a day-by-day thing, and who knows, these things continue to rip. So anyway, quick review. S-Fly, Grub, DIN, and AAXN. As always, you guys need help trading, look me up, LincolnList.com. I hope some of these help you make money. I hope some of them put some cash into your pocket. If you need some help with your own stocks, feel free to send me an email, support@LincolnList.com. Until the next weekly Mutter, stay safe. Stay safe in this wild market. Till next week, take care.